Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Monday. In today's program, I want to have a brief chat about how the market appears for now to be catching its breath after what has been two extremely exhausting trading sessions, plus a couple other things which are occurring in the market at the moment. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course know the risks at hand before entering any trade. With that out the way, let's get started. So I want to start today's program off with sharing a meme with you, which I saw, which actually tickled me, and I thought was quite appropriate to what is happening at the moment. Because as we all know at the moment, we have a lot of dollar strength and a lot of weaknesses across the board, and other things which we'll go into. But I want to share a little meme with you, which I saw, which I quite liked. I thought it was quite funny, and it sort of wraps up a little bit what's going on at the moment. Because obviously, we have the euro lowest level since 2002, Japanese yen trading the lowest level since 1998, and of course the sterling has actually touched all-time lows today during the Asian session. So I actually thought it was quite a funny little meme. But anyway, like I said at the beginning of this program, it does sort of feel at the moment the market is catching its breath a little bit after, like I said, what's been two really exhausting trading sessions. A lot of really exhausting trading sessions. And the currency pair, which we were talking about in particular, the one which has been in the limelight, since Friday, understandably, is catching a little bit of a break at the moment. Because obviously, as we said this morning, it touched an all-time low, not 37-year low, not a 40-year low, an all-time low in Asia. And it's managed to recover slightly because there is, like we mentioned today, there was the anticipation that the Bank of England will intervene. Okay. And at the moment, this sort of chatter or this anticipation of the Bank of England actually doing something has calmed it down at the moment, or calmed the British pound bears down at the moment. And here's the thing, though. There was rumors abound later halfway through the European session that the Bank of England were going to make a comment. Okay. And obviously the market's anticipating that the Bank of England will intervene and possibly do an emergency rate hike to stop the decline of the sterling. Because let's face it, it's been extremely dramatic. And I spoke a lot about it this morning. And basically they're still thinking whether or not to comment. I think that at the moment they seem to be happy, the Bank of England seem to be happy for the market to get the impression or have the idea that they might do something without actually really committing to it or say any comments at the moment. Pretty much like what the Bank of Japan does when they had those rumors or anticipation that the Bank of Japan might intervene. Bank of Japan didn't really say anything. They just let the rumors spread. So I think the Bank of England is doing something similar at the moment. But like I say, this rot is all down, to obviously we got very negative economic data in the UK, inflation at 9.9%, Bank of England already, who's been pretty tepid in their interest rate decisions, pretty slow off the mark. But as well as that, obviously this mini budget announcement, this tax cuts, which is just absolutely petrifying the market, and in many ways has broken the UK. And I want to share with you a comment from, and I saw this again. It sort of made me tickle, and I think this sort of sums it up, how the UK is broken at the moment, and what the general consensus of feeling is. This is by Paul Donovan, who's the chief economist for UBS Global Wealth Management. He said, and I couldn't agree with him more on this, the UK government has planted a forest of magic money trees, and the bond market has taken a chainsaw to them all. And I couldn't agree with a better statement, because literally that's what the UK government has done. It's done some magic money trees don't exist. So anyway, we'll look at the sterling at the moment. Okay, we'll look at the sterling at the moment. But like I say, the general consensus Though we have got a bit of calm at the moment. General consensus is that in time, even and this chap even thinks, even if Bank of England does intervene, in time, the reality of the situation in the UK will mean that the British pound will fall down to 94.50 by the end of the year. So that's not just parity they're forecasting. They're actually forecasting it way below parity to 94.50 by the end of the year. And just to underline the pure panic and fear in the market this morning, the market, remember this morning I was talking about the market pricing in a 150 basis point rate hike by November. The market's doubled down on that now. The market is now pricing in a 200 basis point rate hike by November, a 200 basis point rate hike by November. So this is what the situation with the sterling is. This is what it's done to the market. And like I say, it has in many ways broken the UK and it's fractured a lot of confidence in the market. But let's have a quick look at the sterling, see where it is at the moment. Okay, like I say, this is on a 30-minute chart. It's managed to recover slightly. We're currently trading as it stands at the moment, 1.0808. Okay, 1.0808. Remember, I mentioned that pivot point support. It did test it. It has held for now. That support is around, potential support is around 1.069772. Okay, but so it has found a little bit of assistance. And like I say, it's a bit calmer after the drama in the Asian session and the drama in the European session, the drama which followed on from Friday. But like I say, in my personal opinion, I think it's just treading water for now. Obviously, the market is hoping and waiting for more confirmation from the Bank of England that they will do something to intervene on this. Because like I say, there's no time for caution now. But that's what I said this morning, and I still stand by that. But for now, it's sort of it's finding a little bit of relief, which again is not surprising. But because you get that, it's like what's known as a dead cat bounce. I'm not calling this a dead cat bounce. I'm saying this is a little bit of it, sort of treading water and getting a bit of relief, because once you've had such dramatic moves in the market, you do see some dip buying and you do see a little bit of a calmer nature return to the market. Let's have a quick look at the euro sterling as well. Very much a similar pattern. Sterling again has managed to fight a little bit of ground again against the euro, but again, like I said, I think this is just catching its breath. And don't forget, I'm going to bring this up again, some other comments in relation to the euro as well. Don't forget the euro and the Eurozone has its own problems as well. And of course, they're being overshadowed greatly at the moment by the problems in the UK, but doesn't mean those problems aren't there. So I have no doubt those problems will be there. Currently trading at the moment 0.8933. But like I say, this is the currency pair having all the headlines. It's still, if we look at it on a daily, again, it's found that little bit of a bounce from that potential area of support. But realistically, we've got a long way to go for Ella to have the confidence of the balls that the sterling can fight back, continuously. But anyway, on other developments, obviously we had Christine Lagarde. She spoke. She was speaking today, and she said in her speech, she said that the depreciation of the euro has added to the build-up of inflationary pressures. So it's helping with inflation, which makes sense because if the euro is weak, then it's more expensive to buy things. This is what I was saying this morning when I was discussing the sterling. She also went on to say they expect to raise interest rates further over the next several meetings. That, for Christine Lagarde, is actually quite hawkish for a change, because I often talk to her in the past. She's been pretty dovish. That's quite hawkish. However, the knock-on effect, to be fair, and we'll bring the euro up in a minute. It's had a little boost, but like the market's pricing in 200 basis point rate hike by the BOE. The market is pricing in 75, another 75 basis point rate hike by the ECB in October, and they've repriced it in. So not a gigantic boost. Let's bring the euro up now as well. As you can see, this is on a daily. Still really under pressure. because we still have dollar, who's still king very much. And apart from a little boost, apart from the hit of the 20-year low in the Asian session, it's been a little bit range bound at the moment, trading between 0.9630 and 0.9697. Currently trading at the moment at 0.9658. Let's have a quick look at something else. What else has happened today? Oh, yes, of course. Oil has rebounded slightly from a 9-month low at the moment, because it was like a 9-month low earlier on in the session. It's rebounded from that. Currently trading now higher at $80, or just around $80 a barrel. So it's had a little bit of a boost. Obviously, it was under a lot of pressure, like the whole market was today or on Friday, because of real recession concerns, not just for the UK, because obviously, but the whole global situation. So that was clearly under pressure, because obviously if you have a recession, demand dries up. So this is heavily weighed on oil prices as well. Gold as well. Again, this is under pressure again because of really of a stronger dollar. After Friday's massive decline, currently is still now range bounding, $1,646 an ounce there as well. So yeah, Bitcoin is managed to recover slightly as well. Actually, Bitcoin's doing slightly risk appetite on, currently trading at $19,200. So that's favoring quite well. Again, like I said this morning, I'm going to be taking a keen interest in Bitcoin over the coming sessions, especially when though it's risk appetite off and it is a risky asset, I do think with the recent pressure on the likes of the sterling and the euro and the yen, which I'll pull up again, we'll look at the yen in a moment, I think, again, Bitcoin might start standing out, might having a bit of interest in the future. So be interesting to keep an eye on that. Like I said, let's look at the dollar yen again. Like I say, the drama of the BOJ intervention. We all know where they're, what level they're willing to let it go to now. They've given that game away. Currently trading now at 144.21. So again, like I say, if we get another BOJ intervention, I can potentially see this pair then being range bound for the short to medium term as well. Stock market, S&P 500, after obviously how many days? 1, 2, 3, 4 constant days of straight losses. S&P currently trading slightly in the green, slightly higher at 3,711 points, and tech market doing the same. Nasdaq is also trading slightly higher at 11,456 points. So yeah, the other thing which has happened today, again, this is what's really going to start, it's taken a lot of headlines in the market. Okay. I spoke a little bit about it this morning when we were discussing the UK and the sterling. Excuse me. We were talking about UK gilts trading, being at levels, or their yields being at levels not seen since 2010. But this does appear to be across the board. Basically the bond yields are increasing considerably, and it's actually one of the worst years for the bond market for high yields since 1949. We seem to be breaking a lot of records at the moment, a lot of records. But anyway, other major events to come in the market. Don't forget, we've got Lagarde is speaking at the moment. She spoke earlier on. We actually have a Fed member speaking tonight, which will be quite interesting. We have US durable goods, Germany CPI, US GDP, which I will do a watch along, and of course UK GDP, which I think is going to be a pretty potential barn burner worth watching. And of course EU CPI, which when it was last reading was 9.1%. Are we going to see an increase in that? As the markets currently stand, like I say, it's catching its breath at the moment, which is not a surprise. FTSE slightly in the green, negative 0.11%. DAX currently in the red, 0.41%. And Euro Stoxx 50 currently trading in the green at 0.61%. So there we go. After all the drama of the Asian session and all the drama of the beginning of the European session, the market is catching its breath for the time being, only for the time being. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like, or of course share with me your opinions on the market. I mean, how can you see Can you see the sterling getting as low as that? 97.50. You know, by the end of the year, 97.50. Can you see that? I mean, like I said, I personally see I can see real danger right now testing parity against the US dollar. I definitely can see that. Maybe dipping below parity, certainly by dipping under parity by the Q1 of 2023. I can see that potentially happening. So, like I said, I've been a bear on the sterling for a while. Okay, if there is no questions, not a problem. Not a problem. Don't forget, if you think of a question later, you can put it in the comment section, either on Facebook and YouTube. I will see them, and I will reply to them next time I go live on air, which will be tomorrow, obviously at 8 a.m. UTC, and again, of course, at 2 p.m. UTC to discuss the US session. So please come and join me for that. If there is no questions, not a worry. Don't forget, like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little video and you've put up with me, by all means, give me one of those. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.